Tesla's sudden downfall, the collapse no one predicted. In an astonishing twist of fate, Tesla has suffered a catastrophic collapse, one so swift and severe that even the most seasoned analysts were caught off guard. In less than 90 days, Elon Musk's electric vehicle juggernaut has crumbled under the weight of geopolitical pressure, corporate missteps, and public backlash. Tesla's stock has tumbled by more than 53%, erasing over $400 billion in market value. But the real alarm came from Europe, where Tesla's once thriving EV sales have evaporated, down a staggering 70% across the continent. Panic has set in, not just within Tesla's boardrooms, but across the global financial sector. And this wasn't a random coincidence, it was retaliation. Europe hit back hard against US trade policies, and Tesla became the prime target in this escalating economic war. The fallout has sent shockwaves through Wall Street, raised questions about Tesla's long-term viability, and exposed just how vulnerable the company is when political and public sentiment turns. So, how did this all unravel so quickly? And is this the beginning of the end for Tesla's dominance? The European collapse, from market leader to market reject. Tesla once reigned supreme in Europe's electric vehicle landscape. Between 2018 and 2022, the company enjoyed overwhelming success, outperforming local giants like Volkswagen and Renault in markets like Germany, France, and the Netherlands. Consumers couldn't get enough of the brand's futuristic designs, cutting-edge tech, and Musk's larger-than-life persona. But by Q1 2025, everything changed. In just 3 months, Tesla's European sales imploded. Eurostat and various national vehicle registries confirmed a brutal collapse in deliveries across the EU, down more than 70% year-over-year. In Germany, Tesla's most important European market, sales dropped by 73%. France saw a 66% plunge. Italy was no better, reporting a 70% nosedive. This wasn't a gradual decline. It was a total rejection, as if a switch had been flipped. Why the sudden turn? A convergence of factors. Surveys by European AutoWatch revealed that over 60% of Tesla's former customers now see the brand as untrustworthy. Rising prices, driven by US tariffs, combined with Musk's polarizing political comments and widespread anti-American sentiment, led many to walk away. Adding fuel to the fire, local automakers seized the moment. Brands like Peugeot and Renault cut prices and expanded their EV lineups. Chinese competitors, particularly BYD and NIO, flooded the market with lower-cost options, no political drama included. Tesla's share in Europe has now plunged below 5%, its lowest point in more than half a decade. Wall Street panic, the $400 billion meltdown. The free fall in Europe was only the beginning. Tesla's financials soon followed the same grim path. By the end of March 2025, Tesla's share price had dropped by over 50%, bringing its market cap down from $770 billion to just over $360 billion. That's a $410 billion loss, an almost incomprehensible collapse in such a short time. This wasn't due to a single event, but a chain reaction of investor panic, shattered confidence, and systemic vulnerabilities. First, the European sales nosedive disrupted Tesla's growth narrative. Second, Trump's trade tariffs inflated costs across Tesla's global operations. Third, Musk's escalating political rhetoric unnerved both customers and major investors. Big institutional players began dumping their Tesla holdings. Hedge funds cut their losses. Credit agencies issued downgrades. Analysts slashed price targets. Margin calls triggered automated sell-offs, and smaller investors were caught in the storm. Tesla went from being a poster child of American innovation to a financial cautionary tale, almost overnight. Elon Musk's role, lighting the match. While Tesla burned, Elon Musk seemed determined to stoke the flames. Between January and March 2025, Musk's public behavior intensified scrutiny and deepened Tesla's troubles. He openly supported Donald Trump's new trade tariffs, framing them as a defense of American innovation. In Europe, this was seen as deeply antagonistic. Many already viewed Trump's trade policies as economic aggression, and Musk's alignment with them sealed Tesla's fate. But it didn't end there. Musk called European leaders bureaucratic parasites and claimed EU environmental laws were targeted attacks on Tesla. European media exploded. Protesters gathered outside Giga Berlin, accusing Musk of exploitation. In France, calls for a Tesla boycott grew louder, with influencers urging consumers to buy domestic. Even in the US, questions began to surface about Musk's judgment. His increasingly political posture, combined with erratic social media activity, caused a ripple of fear across investor communities. Musk wasn't just damaging his brand, he was eroding trust in one of the world's most influential companies. The government speaks out. On March 25, the situation reached a new level of urgency. In a rare move, the U.S. Commerce Secretary publicly warned about the risks surrounding Tesla. Citing exposure to retaliatory tariffs, falling international sales, and Musk's destabilizing behavior, the government's tone shifted from supportive to skeptical. This sent markets into another tailspin. Tesla's stock dipped 6% within hours. Confidence plummeted. The once untouchable company was now seen as a liability, not just to investors, but to American economic stability. Questions began swirling about Tesla's future partnerships, its ability to navigate regulation, and its place in the global auto industry. But the worst was still to come. The trade war trap. It all started on January 3, 2025. In a fiery press conference, Donald Trump signed an executive order imposing sweeping tariffs on goods from the EU, China, and Canada, aimed squarely at protecting U.S. manufacturing. But Tesla, despite being an American company, stood directly in the blast zone. The tariffs targeted core EV components like lithium, cobalt, nickel, and battery parts, materials Tesla sourced globally to maintain slim margins. Some tariffs reached 25%, while others climbed to 35%. For a company built on international supply chains, the impact was devastating. Tesla's costs soared. Profit margins shrank. Prices rose, and competitiveness fell off a cliff. Ironically, the very trade policy meant to protect Tesla ended up suffocating it. Asia strikes back. China responded swiftly and decisively. New tariffs on American EVs, ranging from 15% to 30%, hit Tesla hard. Regulatory crackdowns followed. Environmental audits and inspections at the Shanghai Gigafactory delayed production and ballooned operating costs. State media began criticizing Tesla's data practices. Social campaigns pushed Chinese consumers toward homegrown brands like BYD and NIO. Government contracts quietly excluded Tesla, favoring local companies instead. South Korea joined in, implementing new tariffs and regulatory roadblocks that slowed Tesla's imports and slashed sales potential. Together, China and South Korea had been massive growth engines for Tesla. Now, they were closing their doors. And with rising prices and shrinking trust in Europe, Tesla found itself isolated, losing ground in every major market. The supply chain breakdown. By mid-2025, the knock-on effects of the trade war brought Tesla's manufacturing machine to a halt. Tesla's global success relied on an intricate web of suppliers, from cobalt mines in the Congo to battery plants in China and nickel shipments from Indonesia. That system was now in chaos. Trump's tariffs, and retaliatory barriers from other nations, crippled Tesla's ability to source key materials affordably. Steel and aluminum prices spiked due to Canadian and Chinese tariffs. Battery costs surged. Semiconductor deliveries faced delays at customs. Each new hurdle added complexity, cost, and production delays. Tesla tried to relocate production to the U.S., but American plants were already stretched thin. And with rising labor and compliance costs, the domestic advantage quickly vanished. The seamless, globalized EV dream was falling apart, piece by piece. The uprising, global protests shake the brand. By spring, public outrage had reached a boiling point. Across Europe and the US, coordinated protests erupted outside Tesla dealerships, factories, and offices. What started as digital discontent exploded into physical demonstrations. In Berlin, Paris, and Madrid, angry crowds chanted slogans like, "No more Musk madness," and, "Buy local, save jobs." Activists condemned Tesla's perceived role in economic nationalism, a pawn in Trump's trade war. In the U.S., factory workers walked off production lines in Nevada and Texas. Unions accused Tesla of turning its back on the working class. Environmental groups, labor unions, and disillusioned customers joined forces, attacking Tesla's culture, ethics, and leadership. These protests weren't just about tariffs. They were about betrayal. People felt Musk had used his influence irresponsibly, sacrificing the company's reputation for political alignment and ego. The fallout: Tesla's identity crisis. Tesla, once a symbol of the future, is now teetering on the edge of collapse. What began as a political scuffle became a full-scale economic disaster. Musk's actions turned markets against him. His rhetoric alienated allies. And his company is now drowning in the chaos. Investors are fleeing. Consumers have turned cold. Governments are issuing warnings. Protesters are filling the streets. And global competitors are swooping in to claim Tesla's lost ground. What happens next is anyone's guess. Can Tesla survive the storm? Or is this the final chapter in a once glorious rise? One thing is certain: no one saw it coming this fast.